One of the big issues that we have to face as we prepare financial information is when do we recognize revenues and expenses? The problem that we run into is that because we use artificial time periods such as months, quarters, and years, and we also prepare financial statements either on a fiscal year basis or a calendar year basis, we have to come up with a consistent approach in order to determine when has revenue been recognized. As we mentioned before in earlier recordings, recognizing revenues will be based upon whether we use the cash basis of accounting or the accrual basis of accounting. The cash basis of accounting says is that we recognize revenues when we receive cash. Now that could be an inherent problem because one of the situations that could occur is that you receive cash before you provide a service. And if you receive that cash before providing a service, have you truly earned that revenue? So the question then comes up is the cash basis of accounting a true indicator of how a business is doing? According to generally accepted accounting principles, what we should be doing is recognizing revenues at the time that we earn the revenue, not when we receive the cash. So this timing issue that comes up is very important to determine when is revenue recognized. So in accordance to generally accepted accounting principles, we are required to use the accrual method of recognizing revenues, which is when we perform the service or we sell a product to a customer, not when we receive the cash. If we receive the cash in advance of providing the service, we actually have an obligation that we must provide to the customer, which is at the time that we earn the revenues. So here's an example. Assuming Conrad Dry Cleaners cleans clothing on June 30th, but customers do not claim and pay for their clothes until the first week of July. So the question then is we've provided the service in the month of June. However, they haven't provided us the payment for the service until the month of July. If we were on the cash basis of accounting, we would not recognize the revenues until the month of July, when actually we did the work in the month of June. So instead, what we need to do using the accrual method of accounting is recognize when the service was actually performed. In the month of June, we did the service, so we actually earned the revenue. So as you can see in the journal entry on the screen, in the month of June, we recognize that we provided the service by recognizing or increasing the service revenue account by doing a credit. But we also recognize that the customer owes us money in the month of June in when we record the accounts receivable. When we get paid in the month of July, we've already recognized the revenues in the prior month, so all we have to do is recognize that we received the cash from the customer and the customer no longer owes us any money.